The following is a paid program, and the views expressed do not necessarily reflect those of WJZ-FM, Odyssey, its sponsors, or affiliates.
The following is a pre-recorded show. Welcome to Winning in Retirement with your host, Brian Akers, certified financial planner professional and founder of Akers Financial Group. Now, helping you win in your retirement, here's Brian Akers.
Hello, I'm Brian Akers, and welcome to Winning in Retirement. I have with me today certified financial planner practitioner Jeff Akers, works with me at Akers Financial Group. He's been in the industry and working with me for more than 20 years. He knows everything about everything, right, Jeff?
I wouldn't go as far as everything about everything, but I haven't been at this as long as you have. You've been at this a little over 30 years and have that CFP designation as well.
Yeah, well, we like to have some knowledge. The more knowledge you get, the more you realize you don't really know everything. So the cool thing about financial planning is there's a reason to listen to radio shows, and that is you need to pick out things that'll make your life better now and better in the future. The show Winning in Retirement is designed for our clients and also designed for the listeners all throughout Maryland and throughout the country that might listen digitally. What we want to do on today's show is catch up first. Jeff, what's going on in the financial world?
Oh, gosh. This week would have been tax day, but it got pushed back. So your taxes now, your federal taxes anyway, are not due until May 17th. So if you've been thinking, I really should make a Roth IRA contribution for 2020, well, guess what? You still have time to do that. You can do that up until May 17th. Now, your state taxes, they actually gave us a little bit longer. I believe that one's July 15th to file those. But if you're going to get your federal done, you may as well get the state done at the same time.
But you don't have to pay the tax until that time. Now, so the neat thing is this. April 15th was supposed to be the due date. So now it's May 17th for federal taxes, and also Maryland, you said July 15th. That's very important, like Jeff was saying, about contributions to IRA or Roth IRA. We love Roth IRAs. We think you need to examine using the Roth IRA. You can contribute for the year 2020, so last year, all the way up to this filing date, which is a great thing for those that had earned income last year to put money into a Roth IRA. So when we're talking about taxes, there's some pretty interesting deductions that are sort of new this year. One of them is the fact that in 2018, the tax law change at that time lowered the brackets down and then took away a lot of itemized deductions, made things more simple, and gave a standard deduction to many, many people. And one of the things that we can see on a return this year is that even if you do a standard deduction on your tax return, you can take $300 of charitable giving, of cash giving or check giving, of course, not giving clothes away, but giving out actual money. You can take that off your taxes in addition to your standard deduction. I think that's a really neat thing with the current tax law, right, Jeff?
That is a good thing because a lot of folks, they were contributing to charities and then taking that itemized deduction, and now, like Brian said, with the standard deduction being so high, it didn't make sense to itemize that. But it's nice to still get that charitable break. Another nice thing that they did in this most recent was unemployment. Folks that were collecting unemployment, unemployment is taxable. It's a taxable benefit that you receive. Well, one of the things that they did was they waived the federal tax on around $10,200 of unemployment that you might have received last year. So if you already filed your taxes before this came out, the IRS says that they're going to send the money back to you that they owe you as an additional refund, but you may have to file an amended tax return just to make that case. So if you received unemployment last year and you've already had your taxes done, check with your tax preparer, see what they're doing, and see how much more you're going to get back as a refund.
Yeah, we actually have a separate tax company called Daniel Allen Tax, and what they've been doing is have a pile of unemployment returns that were done prior to that law change, which occurred after they got going. Some of the tax software can't handle the tax-free portion on the Maryland yet, so make sure you check your tax software before you do your amendment. It might not let you. So you might just have to wait till it's all up to date. Once it's up to date, you can amend and sort of push it instead of waiting for the IRS to send you a check in the future someday. All right, so that's just a little bit about taxes. I would tell you that tax season being extended is probably a good thing because of the mail. There has been a lot of issues with paper mail being sent. We think you should only file taxes electronically. You should be careful with using just the regular post office with when it comes to mailing your tax returns, because it's a very private situation. The electronic is a great way to file your tax returns. Now let's talk about the stock market, Jeff. They've been hitting the highs like forever, like the highs in many of these different indexes. What else do you think's been going on in the stock market?
I really think last November, when Pfizer announced that they had a vaccine, a lot of stocks really kind of took off. And that trend, I think, has continued this year. A lot of things that had been underperforming last year were way down because they were closed or they couldn't do much in the way of business, really started a comeback. And that trend, like I said, has continued. So the market has gone higher and higher this year. And with new money being pushed into the economy and into the market from the government with these stimulus plans and stuff, that just kind of pushes stocks higher. But we will see some volatility for sure. One thing that we need to keep in mind is that markets go up and markets do go down. So we need to keep that in mind and make sure that our allocation is correct as we go forward through the rest of this year and into 2022 and beyond.
Yeah, the stock market has been very strange over the last few weeks. The market's rising, and then there's some very strange things going on. One of them was a hedge fund sort of imploding about 3-4 weeks ago with some banks that were supporting that with extremely high leverage. And that's a really bad sign for the overall stock market, because if more financial institutions are doing margin at up to 20 times, that's a scary, risky venture that will cost a lot of money in the markets. There's also been, of course, the GameStop trades and all the other kind of trades. That right now seems to be slowing down a little bit. But I guess the trade right now, the focus has been on a lot of cryptocurrencies. So this is a change of things that is occurring throughout the world. It seems that China and their digital currency is sort of leading the way, using the backbone of Bitcoin, things like that. So when it comes to cryptocurrencies, these are something that's not quite regulated yet, not quite where people in financial services industry wants to put money that's medium risk. I would say cryptocurrency is still in that extreme high risk category, even though many people have done very well, making some money in that. The hard part with cryptocurrency is that right now it is extreme high risk. If you're looking at it, it means if you make money, you'd be blessed that you made money, but you could also lose it as quick as you made it. So be careful out there. So the other things that are going on in the stock market is that since, like Jeff was saying, since the vaccine came out, the market's been broadening on the opening trade, they call it. The opening trade are things that create jobs, get people back to work. That is going to take some time. You also have to be careful when you look at this and you're investing your money in the fact that opening doesn't mean perfect opening. Opening doesn't mean quick opening. So sometimes in the stock market, there's an expectation of, boom, it happens. The stock market in general is looking ahead like 6 months or longer to where we're headed. And right at the moment, the opening is what we're thinking that we're headed. And so that's good. The earnings look good. I think most reports are going to look good if you go year over year, because last year at this time, things were locked down. There was no business to be had. And so can you grow out of zero? Absolutely. So most people, company numbers should be pretty good. Didn't want to make this a stock market show today. What we've tried to do is this. We put together a great show, but we felt we needed to cover some things that are pressing right now in the market, because that does matter in an ongoing basis with any and all clients that we work with. We manage money on a day-to-day basis for our clients and manage their financial planning. It's very important that you put that all together. Now, we found that many people have another thing that they need to think about, and that's what this show is going to be about, and that is this: life insurance done right. We need life insurance done right, the right way. no matter what you've heard about life insurance, you need to hear the show that we have set for you. When it comes to life insurance, a lot of people are sort of resisting it, ignoring it, not wanting to think about it, talk about it. Life insurance is the missing piece in most plans that we've seen. Have you seen that, Jeff?
I absolutely have. Nobody wants to think about their own demise, and so that's a challenge. But every time that I meet with someone new, I go through kind of the basics of financial planning. And the first step in that process is to protect your family. And one of the ways that we protect our family is by having life insurance, because if you're young, you're married, you have kids, and something happens to you and you're the provider, well, what's going to happen to your family? Are they going to be able to afford to stay in the house where they're living? Are they going to be able to afford the lifestyle that they're now used to? Or are they going to have to change significantly because they don't have your income coming in anymore? So I really believe that life insurance is one of the more loving things that you can do for your family to protect them in case something horrible happens to you.
Right. When you look at the word live and the word love, to live is great, but if something happens, we take that I out of the word live and put O, and it makes it love. The love part is, what are you leaving behind? And can you take care of it? So throughout this show today, we're going to try to explain what life insurance done right would look like. It is a needs-based calculation. It is not a sales-based decision. If you're being sold a policy, you need to put up a stop sign and say, why? With life insurance, you got to start out with the word why. It is so important that you know why you're buying life insurance. That will lead us to things such as, well, I know why I need it. How much do I need? And then that leads to how to pay for it, which is all about policy design. Yes, we're going to be covering many of those things. What do you think, Jeff, on that concept of the why?
There are going to be a lot of things that we have to go through with life insurance. Life insurance has a purpose. We talk about purpose for money and things like that. And so life insurance has a purpose. We need to make sure that it's satisfying that purpose.
Absolutely. That life insurance and putting all this kind of plan helps you be able to retire. Because we all know that the best part of retirement is getting your time back. You decide how to use it. Before retirement, your time is tied up with other commitments, mainly your job. A lot of that goes away when you're retired. Your time is now consumed by things that you want to do. To begin winning in retirement, you can give us a call at 833-WIN-RETIRE. That's 833-WIN-RETIRE. When you call, leave us a voice message, and Susan will call you back on Monday to schedule a virtual meeting or an in-person meeting with one of our team of advisors. Start planning for your retirement now. Call 833-946-7384 or visit AkersFinancialGroup.com. Should you rent or buy your life insurance? We will explain after this short break.
You are unique. Just as no two are alike, each individual's financial situation is uniquely their own. That's why the Akers Financial Group's team of advisors begins each relationship with a proven process that identifies your financial fingerprint. We'll guide you through a series of steps designed to provide a complete and accurate snapshot of where you are right now. Everything we learn about your financial fingerprint will become part of a detailed financial plan created especially for you. We'll never give you a cookie-cutter proposal or suggest a one-size-fits-all portfolio. The financial plan takes you from where you are now to where you need to be. Begin by discovering your financial fingerprint right now by going to getmyfinancialfingerprint.com. That's getmyfinancialfingerprint.com.
Member FINRA SIPC.
Imagine you're retired. You wake up in the morning and you don't even know what day it is. Every day seems like a Saturday. You can sleep in, cook a nice full breakfast without thinking about morning traffic or work deadlines. The Saturday calmness you used to crave is now your everyday feeling. You're not worried about your retirement income or how your investments are doing. Your biggest decision that day is where you're going to drink that first cup of coffee. Is that the kind of retirement you want? If it is, then sit down and talk with the team at Akers Financial Group. They want to help you get there. They've been helping families in Maryland plan for retirement for over 30 years. Call to schedule your complimentary meeting at 833-WIN-RETIRE. The number again is 833-WIN-RETIRE. Start planning for your retirement now. Call 833-946-7384. Member FINRA SIPC.
You're listening to a pre-recorded show. Welcome back to Winning in Retirement. Call 833-WIN-RETIRE now to schedule a visit with Brian and his team and begin winning in retirement. Once again, here's Brian Akers.
Welcome back to the second quarter of Winning in Retirement. You can give us a call anytime when you have a question about what we're talking about today. You can also go to our website at akersfinancialgroup.com. And on that website is our webinar. Oh, man, we got a great webinar on there. That webinar is Social Security. Sam Payne, an expert in the Social Security planning. We had him and myself do a video, and I think it's excellent, of course. It covers some of Social Security, but never everything. But I want you to go to akersfinancialgroup.com. Check out the webinars. One coming up next week will be on the Roth IRA, which will be some basics and understanding Roth IRA contributions and conversions. The show today is called Life Insurance Done Right. And the question we want to start here in the second quarter is this. Is Jeff, should you rent or buy your life insurance? Yes, I'm bringing Jeff Akers in. Jeff Akers is a cousin. Jeff Akers is the vice president. He's a certified financial planner practitioner. All right, Jeff, there's your question. Should you rent or buy your life insurance?
Well, last segment, we were talking a little bit about purpose of life insurance. And so really, the purpose of the life insurance, why you're buying it, is going to determine whether or not you should rent or buy your life insurance. Now, you might be wondering, what are they talking about, renting or buying? Well, there's two broad types of life insurance out there. One type is called term insurance. Term insurance is something that you have for a set period of time, that's the term, for a certain death benefit. And at the end of that term, then things change. Either the life insurance goes away or the premium goes way up, something like that, but it's really only for that set period of time. We think of that as renting your life insurance. The other kind is a permanent insurance, permanent life insurance. You might have heard of whole life. That's the oldest kind of permanent insurance, life insurance. And that's where it builds up a cash value, and as long as you're paying that premium, sometimes as you get older, you don't even have to pay a premium because the policy can pay for itself. But that life insurance will be around as long as you are. So that's buying your life insurance, something that's going to last as long as you do. It's not necessarily for a need that is just a certain time section. So that's renting versus buying your life insurance.
Yeah, I was thinking of it a little bit of another way, and that is when I bought term insurance 21 years ago, I bought it because we had two young kids. And basically, it's like you go to an insurance company and you place like a bet. You put money down and you say, I'm going to pass away this year. And they say, we'll take that action. We'll actually, we'll say, yes, if you pass away, we'll write a huge check, tax-free to your family. And then what happened is I bought a 20-year level term. At the end of the 20-year level term, it ended. Now, I don't get my money back. I don't get anything back. I place those bets every year that something might happen. You know, it's a risk, trying to lower the overall risk if something would happen. Because we strongly believe in life insurance done right, that you got to plan as if something might happen tomorrow, and you got to have the right life insurance to meet that need. There are times in our life when we have kids and expenses and all kinds of stuff where we need a lot more life insurance. That is a time of life when we need to rent it for a short period of time. We call that term life. That term life insurance is where the insurance company will pay a check. But at the end of that term, you no longer have insurance. It's gone. All right, Jeff, you have a good example of something like this?
Well, I have a couple that they're young, they've got young kids, and they have life insurance, but we were taking a look at what they had. They have a little bit of permanent, and they had some term. The bulk was the term. Brian was talking about, those expensive times, you want to be able to cover things. And so they had that covered. But when we looked at the term life insurance, the kind that they had, the premiums would go up a little bit each year. And so it was getting more and more expensive as time went on. So we shopped around and found a term life insurance policy for a set period of time that matched the death benefit, was actually a little bit higher, and the premium was actually a little bit less than they were paying, and it would be a level premium for the entire period of the term insurance, in this case 20 years. And so for that 20 years, it was going to be the same amount each year to cover their life insurance need instead of having a premium that was increasing each year. Now, with term insurance, life expectancy plays a big role in how much you're paying for that insurance. And over the years, as life expectancy has gone up, the cost of term insurance has come down. So even if you have term insurance, it might be worthwhile just to check and see if the rates are any better for you now than they were when you got it. As you get older, of course, the insurance is going to become more expensive, but it's still a good idea just to double check and make sure that what you've got is the right price, because it's got to fit in your budget. Brian mentioned how to pay for it, and it's got to fit in your budget.
So when you were working on this policy for this young couple, you were actually working on a death benefit need that they had at that time?
Yes, we take a look at the need, and the need that they were meeting with the life insurance they had was right. So we talked about, here are the purposes of life insurance. There's debt. They've got a mortgage, so they needed to cover that. Each of them have good paying jobs, and so we have to be able to take care of their part of the income slice. If they were to die in the next year, how's the rest of the family going to get by? And then, like I said, with young kids, how are we going to cover taking care of them as well? And they were interested in having a little bit of money for college as well. And so we went ahead and put that in the term insurance, because once the kids grow and they're old enough, they're out of college, then obviously you don't need to worry about that. So that's a renting life insurance example.
All right, Jeff, that's a good example of renting. That policy that client had, what kind of term life insurance was that?
It was an annual renewable term, so the premium would go up every year as they went forward.
All right. They did not have mortgage insurance.
No, it was not specific mortgage insurance.
Now, sometimes out there, when you're looking at term insurance, what happens is you might be sold a mortgage insurance policy where they actually decrease the death benefit every year, but your premium gets to stay the same, which I think is interesting. So a decrease is a lot of the times called mortgage insurance. We're not a fan of those because we can buy it cheaper by buying a policy that's your policy. Now, this also has to do with when you're renting insurance or trying to get it to cover for a short period of time. You might find that they offer insurance through your work. And so through your work, what you got to be careful with is the fact that if you don't stay at a job long, you lose that insurance every time you switch companies. And not every company has a group benefit. One of the things that I found with group benefits is when you get a new job and you check the box for insurance, you're insurable at that time. What does that actually mean, Jeff?
Well, a lot of life insurance is medically underwritten. And so that means that you're going to have medical tests, and they're going to check your medical records to see what your risk of dying is. But when you get group insurance, like what Brian was just talking about, there's a period of time where there's a guaranteed issue for a certain amount of death benefit. And that means you don't have to go through all the medical testing. You could be unhealthy and you still qualify for a certain amount of life insurance. So when you get a job and if you're not healthy, if there's some life insurance that is guaranteed issue, you want to take advantage of that.
All right, so in the topic of renting, we call that term insurance. That's the industry calls it. Term insurance is for a certain amount of time, a term period. The opposite of that is to actually buy it, to own it. What kind of policy is that, Jeff?
Well, permanent life insurance, that could be whole life, universal life. There's all different kinds of names for it and specific types. I had a case with another young couple that they make a good salary. They've got young kids, the whole 9 yards again. So there's a death benefit need, but they're also maximizing their retirement savings, and they had more money that they wanted to set aside for retirement. So we actually covered part of their death benefit using something called fixed indexed universal life. And this is a type of policy that builds up a cash value inside. It provides a death benefit, and up until they retire, that death benefit is part of their need for life insurance. Once they retire, though, they can actually start taking money out of that using that cash value that's built up over the years and receive that tax-free. So this was a way to use life insurance to kind of serve two purposes. Again, this was a situation where young couple, good income, and we did this with the wife because she was very healthy and the premium, the cost would be less. But it was I think it was a really good place to use that kind of life insurance, that permanent life insurance, to provide some future income too.
Right. So the design there was a cash value policy for adding to their retirement planning. And that's where you can pull out some of the cash value later for tax-free when they hit their retirement years. Is that true, Jeff?
Yes, that's exactly what we were looking to do for them. Back before Roth IRAs existed, life insurance was a way that a lot of folks tried to do tax-free income in retirement.
Right. So the Roth is a way of putting some money aside. The problem is that as you make more and more money in your salary or your business, you might have limitations to savings. Roth IRA contribution limits are $6,000 before you're 50, $7,000 over the age of 50. Life insurance, you can design your own plan. Life insurance, given enough time, can be another way of saving for retirement. The biggest reason is the tax-free withdrawal down the road. So that permanent policy is a policy that will stay there a long time. So when you're thinking about why do you need life insurance, that drives how much and then how to pay for it is this decision between renting or buying. Very important topic. I'm glad everyone stayed awake during that topic and understand a little bit more about term life. Akers Financial Group, we're local, we're independent. We don't report to a big company on Wall Street. We report to you. We have offices in Forest Hill and Lutherville, but work with clients throughout Maryland and around the entire United States. This talk is all about your retirement, not about us. We want you to begin winning in retirement. Give us a call at Akers Financial Group. You can actually set up a free meeting by calling us at 833-WIN-RETIRE. That's 833-WINRETIRE. When you call, you can leave us a voice message, and Susan will call you back on Monday to schedule a virtual meeting or an in-person meeting with one of our team of advisors. Start planning for your retirement now. Call 833-946-7384 or go to our website at akersfinancialgroup.com. Do you want your family to receive a tax-free check when something happens to you? We will tell you how to do this in the second half of our show.
Long before 18-year-old Brooks Robinson was signed to play third base, and years before Natty Boh began brewing at the corner of Conkling and O'Donnell Streets, Baltimore families relied on the Evans family and the Evans Funeral Chapel and Cremation Services to help them during some of their most important family moments. Hi, I'm Charlie Evans, and for 4 generations, my family and I have been there for families, providing care and compassion in their time of need. Evans Funeral Chapel and Cremation Services provides the best facility, staff, and personalized service for your family. We have 3 convenient locations to serve the community: Parkville, Forest Hill, and Hereford. For more information, visit us online at evansfuneralchapel.com or call 410-665-9444. Evans Funeral Chapel and Cremation Services, serving Baltimore families since 1865. I invite your confidence.
Are there times in some games you wish you could just turn on the TV at the 2-minute warning? Because that's the most important part of the game, right? When it comes to your retirement, don't wait until the 2-minute warning. Sometimes, so much happens right before you retire. Don't wait until your retirement 2-minute warning. Whether you're in your 50s or 60s, near or already in retirement, there's still time to put a plan in place to make changes. Don't wait until the last 2 minutes and say, okay, what do I do now? Can you win the retirement game like that? Come in and talk with the team at Akers Financial Group. They've been helping families in Maryland plan for retirement for over 30 years. Call to schedule your complimentary meeting at 833-WIN-RETIRE. The number again is 833-WIN-RETIRE. Start planning for your retirement now. Call 833-946-7384. Member FINRA SIPC.
You're listening to a pre-recorded show. Welcome back to Winning in Retirement. Call 833-WIN-RETIRE now to schedule a visit with Brian and his team and begin winning in retirement. Once again, here's Brian Akers.
Indeed. Welcome back to Winning in Retirement. I'm Brian Akers. Here with me today is Jeff Akers, certified financial planner practitioner at Akers Financial Group. With Jeff Akers, what you get is a special person who has a master's degree in family counseling. He's a financial expert for over 20 years, so he's really equipped to cover many, many topics when it comes to personal finance. Now, on my resume is one of those things called high school basketball coaching, which has been my number one hobby for 31 years. And so when we come out of halftime, all I think about is different halftime speeches. I don't really eat at halftime, get a drink at halftime. I have a speech, I have a game plan. There's all kinds of things you got to do. And so in the radio halftime, we call the timeout, you get a drink of water, and then you're ready to go for the second half. But one of the things you got to do is, what do we got to accomplish to win the second half? And that's what Jeff and I just had a good huddle. We're ready to go. All right. You good, Jeff?
I'm ready. Let's go.
Man, he got motivated. That's awesome. All right, today's show is life insurance done right. All right, let's go with our first topic, and that's this. Do you want to receive a tax-free check for your family when something happens to you? What does this mean, Jeff?
So life insurance is one of those things that it is a tax-free death benefit to your family. So if you pass away and your family is there to receive life insurance, they're the beneficiary, it comes to them tax-free. There's no income tax associated with it. They don't have to worry about that. And it's one of the few things that is actually tax-free. It's a way to leave money to your family without them having to pay tax. Did I mention that it's tax-free? That's an important case. I've had a situation lately where there's a couple, they're a little bit older, they're in retirement, they've saved a lot of retirement, and they just want to make sure that money gets to their kids. And they have a non-qualified variable annuity. Now, it's done really well over the years. It's gone up, there's a big gain in it. The thing with a non-qualified annuity is that when you take that money out, you pay tax on the gain, whatever the earnings are in the annuity. When you pass away and leave it to your heirs, those heirs have up to 5 years to take that money out, and they're going to pay the tax on all of that gain. So in this case, the couple has a big chunk of money in this variable annuity, and so I said, well, what if we annuitize it? That's a way that we turn it into a stream of payments, and we're going to do that over the course of 10 years. The client then is going to pay tax on part of that gain each year over that 10 years. And we're going to use that to buy life insurance for one of them. Now, we have to make sure that one of them is insurable. We talked a little bit about that last time. Somebody's got to be healthy enough for life insurance. But we could buy life insurance and actually double the amount that their kids will get. And instead of paying tax on that half that they would have received, it would come to them tax-free. And so they get kind of a double bonus. Now, there's a few other estate planning things that we're going to do with this, but that's kind of the basics. It's a way to take some money that your beneficiaries are going to have to pay tax on, and you turn it into something that they don't have to pay tax on. And so that the beneficiaries then should be quite grateful to you down the road and have fond memories.
All right, what you just said sounds like a complex financial plan that had to be done over years of advice with this client. So you've been the advisor for them for a number of years, and what you did in this case is you took the why, the reason this couple would need life insurance at all is to provide a tax-free benefit down the road. That tax-free benefit, that actually means when one of them passes away, within a few weeks, a life insurance check or a checkbook with access to this cash will come to them, and it'll be entirely income tax free to their heirs, which I think you have going into a trust. So I think that's is good financial planning, because it takes the why, it figures out how to pay for it, and it all breaks into this need of paying the income tax. This kind of case is good for people that are thinking about legacy. What is the money you're going to leave? What are you going to try to do? It's also good for people who have large retirement accounts, and they understand that if they have a $2 million retirement account, a lot of that's going to go to tax. 30 to 40% will go to tax, and your heirs or even your spouse will not receive that full benefit. So tax-free death benefit is a great benefit under life insurance. It is the great benefit under life insurance, in my opinion. Mm-hmm. Now, when I was thinking about this, I had a case a few years ago where I had a lady who has a large family, no direct kids, but has about 25 family members she wants to give money to. The hard part is they're not her kids. They're not. They're just on their nephews, nieces, cousins, things like that. In the state of Maryland, life insurance does not count for the inheritance tax. And so a real interesting piece on this case was, if we put money that was sitting in a bank account making zero nowadays, and you slide that into a life insurance policy, you can create that death benefit to be income tax free, also to be inheritance tax free. And then the third thing that we're able to do is the life insurance gives you a higher value than the money you put in. So it could be something as simple as you put in $45,000-$50,000 and it's worth $75,000 to $80,000. It could be where you put in $500,000 and it's worth $1 million, tax-free, inheritance tax-free. So in life insurance, there are reasons based on whatever that client has as a goal. So if the family knows what their why is, what they need to accomplish, then you look at basically how to pay for it. And that can be designed through different kinds of policies. Policies that are designed to pay upon a death need to be permanent. Permanent are policies that don't have a set term. These policies have cash value and they do cost more. They are not the cheapest things to do because we're buying a combination policy that'll last a lifetime and pay whenever that person passes away. So life insurance seems to provide what people need at the right times. Hey, Jeff, can you explain how a life insurance claim, how that process actually works?
Life insurance claims are actually surprisingly simple. We notify the life insurance company this person was insured by you and they passed away. They'll send out some claim forms. I've even had cases where if the beneficiary was there with me, they would take the claim over the phone and we wouldn't even have to fill out paperwork. But in general, you fill out some forms, you send in a death certificate, and then the life insurance company either sends a check to you or they open like a money market account and send you a checkbook that you can use for the proceeds from that life insurance policy. You usually have the option of which way you want to receive it, but the claim form itself is 1, maybe 2 pages long. It's really quite simple process.
It's simple if the beneficiaries are filled out properly. We have found in a couple of cases where we've seen insurance agents write estate on the beneficiary line. That creates a lot longer process. So life insurance, when Jeff says it's simple because of everything is done right. Life insurance done right can make it tax-free. Life insurance done wrong can make it taxable. There's lots of examples of that. We don't have time in this show today to cover all kinds of horror stories we've seen in our careers where we had to try to fix things. But when life insurance is done right, you have the beneficiaries written out on the policy. That avoids probate. That avoids the estate. It gets the money to go to the beneficiaries you want when you want it to go. So you need to make sure that when you're thinking about life insurance, you're not really thinking about death and all the morbid things, but you're thinking about who you care about. What do you want to see happen? So let's use this as an idea. If you would pass away tomorrow, what would you want your family to do? Where would they live? What kind of money is needed? What kind of money would you want to provide for them to be able to live the rest of their life without you and your income, without your influence there? What can be done to do that? Life insurance helps do that. What we try to do is make it within the budget, make sure it fits the needs. We want to be able to have a talk with your surviving spouse, and we want to be able to say, you're okay. One of the best things about doing a claim on life insurance and a financial planning is to go to that surviving widow or widower and say, you're in good financial shape because the plan was done when everyone was healthy. We have the right amount of money to provide what you need because this is the moment of time when you need it. You've heard horror stories of widowmaker heart attacks and sudden illnesses, all kinds of things that can cause people to pass away quickly. Life insurance is typically bought when you're healthy. It's, of course, pays whenever that sudden death occurs. Very important to make sure you do it right.
Brian mentioned the beneficiaries, and this is critical, like he said. So if you have life insurance policies, maybe through work or maybe you bought some, get in contact with the company. Find out how the beneficiaries are listed on there and make sure that they are correct. You can give us a call and we can meet with you and go over them with you and just make sure that they're right. Because we don't want to take something that should be a good benefit for your family and turn it into a challenge that they just don't want to go through at that time.
One of the ways of doing retirement planning, because some of us, when we retire, just want to spend it all. But you want to give some money to the kids. Hey, buy some life insurance for that, and then go spend and enjoy all the rest of the money. So that's definitely could be a retirement plan where you want to spend your last dollar on the last day. Life insurance could give the gift that later, if you like. This can be giving to your family or charity, anything like that. Any type of legacy you might want to leave. All right, maybe you're currently in a reaction mode. Maybe you're defensive on the sofa and you keep moving back and back and back, reacting. Reacting has the energy of being defensive. Creating, now you sit up, you sit forward. You have the forward moving energy of creating. The people who will get through all of this in the best shape are the ones who take this opportunity and this time to be in the creating mode, in the solution mode. It's a choice. We want you to win in your retirement by taking this advantage of this opportunity to begin planning with us at Akers Financial Group. You schedule your free meeting with us. Give us a call at 833-WIN-RETIRE. That's 833-WINRETIRE. When you call, leave us a voice message, and Susan will call you back on Monday to schedule a phone meeting or a virtual Zoom meeting or in person with one of our team of advisors. Start planning for your retirement now. Give us a call at 833-946-7384 or visit our website at akersfinancialgroup.com. If you are still in the saving money for retirement mode, you need life insurance. Why? We will explain in the fourth quarter.
The choice of your child's school is vitally important. Wouldn't you go a few more miles for something really special? I'm Brian Wilson, principal of Harford Christian School. Harford Christian is an independent school in northern Harford County, serving students in preschool through 12th grade. Our Uncommon Core makes all the difference. For nearly 50 years, we've partnered with parents in the important responsibility of training children in God's truth. Our biblical worldview stands in stark contrast against today's culture. At HCS, political correctness is never prioritized above God's unchanging truth. We hold the bar high as we prepare students to serve God's kingdom, not just the workplace of man. Affordable tuition and transportation options put the choice of Christian education within your reach.
Come visit the longest established Christian school in Harford County. You can become acquainted with us through a private tour or on the web at harfordchristian.org.
Akers Financial Group was founded on the principles of integrity, trust, and service. We believe each and every client is unique and deserves advice and implementations that apply directly towards their personal financial fingerprint. This financial fingerprint tells us the objective risk tolerance and purpose of the investment and insurance tools that we use to assist our clients in reaching their goals. By discovering the purpose of each financial decision, we can help you accomplish your goals. Intelligent financial design starts with a detailed balance sheet and cash flow to know where to start. This leads to a financial decision that will allow you to reach your goals with your risk tolerance in mind. Our relationships begin with an initial consultation and grows with each meeting. We would be thrilled to work with you and begin your planning process. Call us at 833-WIN-RETIRE. That's 833-946-7384. Or visit our website at akersfinancial.com. Member FINRA SIPC.
You're listening to a pre-recorded show. Welcome back to Winning in Retirement. Call 833-WIN-RETIRE now to schedule a visit with Brian and his team and begin winning in retirement. Once again, here's Brian Akers.
Welcome back to the fourth quarter of the Winning in Retirement radio show. Akers Financial Group, we bring this show to you each and every Saturday morning. This show is designed about life insurance done right. The purpose of the talk show we're having today is understanding that life insurance done right is worth being done for you and your family. Make sure your life insurance is done right, the right way. No matter what you've heard about life insurance, you need to hear this final summary we're going to cover right now in the show. When it comes to life insurance, a lot of people resist the concept of it. Oh, I'll do that later, putting it off. When the reality is that's something we need to do, maybe even by tomorrow. Life insurance is a missing piece in most plans that we see. With Akers Financial Group, we have a website. It's akersfinancialgroup.com. You go there. On that website, you'll see some tabs. One of the tabs is a radio tab. You can hear these shows. You can hear them through podcasts. You can hear them through just any type of recording, wherever you're at. So you can just go to our website and hear that. You can also go to our webinars. We have some great webinars up there right now. One is on Social Security with Sam Payne and myself. Covering the basic concepts of Social Security and understanding what that is. Coming up next week on Thursday is a Roth IRA contributions and conversions done by Alex Monk and myself. But today we're going to talk more about life insurance done right. Jeff Akers, you ready for the fourth quarter here?
Oh, yeah, ready to go.
I sure hope so. Got to keep Jeff awake, you know. All right, so here's the question. If you are still saving for retirement, you need life insurance.
Yes, you do. And the reason is if you're saving for retirement, that means you have not met your goals to satisfy your retirement needs. And so whatever that need is for your retirement, you're going to need to have satisfied through life insurance in case you died tomorrow, next week, next month. It's what Brian was talking about, that sometimes life insurance is one of those things that we want to put off, and sometimes we luck out. We've put it off and we don't die. But sometimes things happen and we pass away, and when we leave our family without the resources that they need to live and thrive, then we've really done a disservice to them. So if you're saving for retirement, then you need life insurance so that you can cover the part of that need that you have not already met through your savings. That's kind of what we're talking about there.
Yeah, it makes me think about some talks I've had with life insurance agents throughout my career. And we talk about life insurance. It sort of goes like this. You know, if a client knocks on the door and comes to your office and says, I need life insurance, you know they're not healthy. You know that they've had some event in their life where they need life insurance, or they think they need life insurance all of a sudden. And if they're not healthy, you can't provide the life insurance. The hardest part in the life insurance part of a financial plan is we got to put it in place when we don't need it. We got to buy it when we're healthy. We got to buy it when things are short of money, because we're short of money is why we need it. So it's a concept is this. If we're saving for goals, saving for our future, saving for our family's future, most likely you need life insurance, and you need more than what you have at work. So you take that why, you want to provide for your family, then you figure out how much you need. You need, let's just use a rough example. At times you need 10 times your salary. So getting a couple times salary through work is not going to be enough. We've seen many cases where they don't even have enough life insurance to cover the mortgage, or they haven't really thought about what income would that surviving spouse have, and how is this all going to work out for them. So understanding life insurance is very, very important, because life insurance done the right way means you won't overpay for it, you won't waste your money, you will actually make your money last a lifetime, which is very, very important. Jeff's got some case studies, I got case studies, and we're here in the fourth quarter, so we got to go in a full court press. Ready? Go ahead, Jeff.
All right, so the case study that I've got right now has to do with legacy. This is someone who she's not married, she has kids, she doesn't have debt, she's really got her savings for retirement set up, but she wants to make sure that she leaves something behind for her kids, and she was concerned about the cost of long-term care. What happens if she gets sick and she needs to be taken care of? All of her resources would be spent to cover that cost of care. So we took a look at a life insurance policy that would provide a death benefit that could be used for long-term care. So her care would be taken care of. Whatever money's left in the policy when she passes away would be left to her kids. And she had other policies that could go to the kids. And if this life insurance was used up for long-term care, then she would leave those other assets to her kids. If this policy was not used up for long-term care, then it was an added death benefit, tax-free, all the things that we've been talking about today. So this was a way to meet a need that she had and a goal that she had to leave money to her family and make sure that all of her resources were not used up taking care of her if she needed care.
Well, Jeff, we actually did a webinar a few months ago that's on our website, AkersFinancialGroup.com. It's called The 5 Most Common Long-Term Care Mistakes. It does cover long-term care life insurance there. Now, time or how did they pay the premium?
Right. In this case, she's paying it over time. She's still working, and so she's paying it over time. There are cases where you might have a lump sum set aside that's your kind of your just in case I need care money, and you can use that to do a single premium.
That's exactly the case study I have. I had a 54-year-old who received inheritance from their father, and they had money sitting in the bank from their father, and what they're thinking is, well, the concerns I have for the future is I never thought about long-term care. And so in this example, about $125,000 was sitting in the bank earning zero, and we're able to put that into a long-term care life for her, and I think it was about $380,000 a death benefit, and provided long-term care benefit, a living benefit. The neatest thing about this is that money can be cashed out, that money can be used if they get sick, and there's money left over if they passed away. So it's not like we're throwing that money down a rat hole. All right, Jeff, you got another case study you can cover?
You want another case study? Man, I've already used up my case studies.
I got more.
I thought you had another one.
I do. I'm just going to step on your toes. I'm going with mine. All right. So life insurance with purpose, very, very important. One of the things that I've found is that when people are in their early 50s and they have not saved their whole life, possibly their kids are finally out of the house, and you got all this extra money, but they max out their retirement plans at work and they can't do any more. I had a case just like that. So we had this lady that we ended up doing an insurance policy where she saved like $12,000, basically $1,000 a month for 7 years. And the goal was to put into life insurance and let it grow until she's later 60s, and then we're going to take out about $13,000 a year tax-free for the rest of her life. So converting that money to the future, getting that money 7 years to equal about a 30-year retirement, it was a good combination. It's a way of using life insurance for retirement. So that's cash value life insurance, works out very, very good. Make sure you know your why as you're doing all these kind of investments.
Yeah, as you did that case study, it reminded me of the one that I did before. It was the same situation with a young couple. They maximized all their other retirement savings, and they just needed another way to save for retirement and meet that death benefit need. So life insurance has purpose. We keep coming back to that. If we know the purpose of the life insurance, then we can design the right life insurance for you. That's what we mean when we talk about life insurance done right. It needs to be done right so that it meets the needs that you have and takes care of the goals that you have. So just give us a call. Brian gives out the numbers and stuff, and we can sit down, go over your situation, see what it is that you need, and maybe even help you see things that you weren't necessarily seeing before. It's one of those things we have to think about when we're healthy, because, like Brian said, once we're not healthy, it's too late to get life insurance. So make sure that you think about it while you can do something about it.
Yeah, life insurance done right, done the right way, starts with understanding what kind of policies you already have. Many times we have a collection of policies, or we have no policy at all, or we just have through work. There's all these combinations, but we start out with that information as planners, and we look at what you have and see how to maximize that. And then what we do is we look at the calculation of the need. What is the family's need right now? And how will that change as you save and invest to the future? And then we come down to how to pay for it. Do we rent it? Do we buy it? Do we want term or do you want permanent? They come in all kinds of versions, all kinds of different marketing names. But understand, you need to take it from your perspective. What is best for you? Any final advice, Jeff?
Well, a long time ago, someone told me that there are certain needs that we have throughout our life. Doesn't matter how old we are. And it could be that, when we pass away, there's certain costs for those final expenses. So that's something that can be covered through permanent life insurance. But then we have other things that come up: mortgage, kids, family, those kinds of things, education. And those are things that need to be covered while they're a need for you. So we want to check and make sure that we've got those covered, and that's where term comes in. And then we get into the other types of insurance that we've talked about today that meet specific needs for you and for your family. So it's important to think about. It's important to get taken care of while you can.
Absolutely. Life insurance done right, the right way, is actually what the show is all about today. Of course, we did not cover every topic. You can always give us a call. At Akers Financial Group, we invite you to sit down for a free meeting to talk about you and where you are in your personal finances. Give us a call at 833-WIN-RETIRE. That's 833-WIN-RETIRE. When you call, you just leave a voice message, and Susan will call you on Monday to schedule a phone meeting, a virtual Zoom, or an in-person meeting with one of our team of advisors. Start planning for your retirement. Start planning the life insurance calculation now. Give us a call at 833-946-7384 or visit AkersFinancialGroup.com. Thank you for listening. I'm Brian Akers from Akers Financial Group, and we want you to be winning in retirement.
You've been listening to Winning in Retirement with your host, Brian Akers of Akers Financial Group. Brian Akers of Akers Financial Group is a registered representative offering securities through Kalos Capital Incorporated and investment advisory services through Kalos Management Incorporated. Akers Financial Group is not an affiliate or subsidiary of Kalos Capital or Kalos Management and does not provide tax and legal services. Advice given on Winning in Retirement is general in nature, and one should seek further advice from their financial advisor, broker, attorney, or tax accountant before investing. Be sure to read each prospectus carefully to understand all the risks associated with each investment.
Losing someone special can be one of the hardest times of your life. Baltimore has relied on the Evans Funeral Chapel and cremation services to help them during some of the most important family moments. Let the Evans Funeral staff make your difficult times as easy as it can be for you and your family. Evans Funeral Chapel and Cremation Services, serving Baltimore families since 1865, a tradition of comfort and caring. Visit evansfuneralchapel.com for more information. That's evansfuneralchapel.com.
Knowledge is power. How much better would life be if you had the power to provide a financial umbrella for your family? Protect your estate? Retire without any lifestyle compromise? Obtaining this kind of knowledge is as easy as making a call to Akers Financial Group with a focus on helping you make decisions that reach far beyond the typical life stages. Akers Financial provides comprehensive, innovative, and personalized wealth management services. Call us at 410-692-9870 or visit our website at akersfinancial.com.
Member FINRA SIPC.
Imagine you're retired. You wake up in the morning and you don't even know what day it is. Every day seems like a Saturday. You can sleep in, cook a nice full breakfast without thinking about morning traffic or work deadlines. The Saturday calmness you used to crave is now your everyday feeling. You're not worried about your retirement income or how your investments are doing. Your biggest decision that day is where you're going to drink that first cup of coffee. Is that the kind of retirement you want? If it is, then sit down and talk with the team at Akers Financial Group. They want to help you get there. They've been helping families in Maryland plan for retirement for over 30 years. Call to schedule your complimentary meeting at 833-WIN-RETIRE. The number again is 833-WIN-RETIRE. Start planning for your retirement now. Call 833-946-7384. Member FINRA SIPC.
Are you reacting or creating with your investments? When you have a sound financial plan, you don't have to be reacting every day. Let us help you create. Tune in to Winning in Retirement, Saturdays at 11 a.m. on 105.7 The Fan. Brian Akers of Akers Financial Group is a registered representative offering securities through Kalos Capital Incorporated, member FINRA SIPC, and investment advisory services offered through Kalos Management Incorporated, both located at 11525 Parkwood Circle, Alpharetta, Georgia, 30005 678 1100. Akers Financial Group is not an affiliate or subsidiary of Kalos Capital or Kalos Management and does not provide tax and legal services.
The preceding was a paid program, and the views expressed do not necessarily reflect those of WJZ-FM, Odyssey, its sponsors, or affiliates.
WJZ-FM, Kingsville, Baltimore. From the Thompson Creek Window Company studios. The one window replacement company that does it all. This is 105.7 The Fan.
He broke his hand. Got it! Oh, Blackwell, guy!
Odyssey Sports Station.